morning, everyone, and welcome to Secured NPL Servicing Panel given by DD Talks. We have an extraordinary panel today because we have a very broad geographical spread. Spain, Italy, France, Greece, Cyprus, and Central and Southeastern Europe. And as well, we have a very broad commercial perspective with us on the panel of both servicers and investors. And before we get into it, I think it would be a good idea for each of our esteemed panelists to introduce himself and give his elevator pitch on what he does for a living and why he's sitting on the panel today. I'm going to go around the house in the block that I see. Maybe we could start with Gianpaolo. You could give a few words. Thank you.
Good morning, Denise. Good morning, Fabian, Gian, Vasilis, Joseph, and all the attendees of this panel. My name is Gianpaolo. I'm in charge of the proprietary operations of Intrum Italy. In Italy, Intrum is a joint venture between Intrum AG and Intesa Sanpaolo, which is the biggest banking group in Italy and one of the largest, of course, also in Europe. We employ more or less 850 employees who are based in 22 cities and towns in our country. The distinguished probably future of Intrum in Italy is that we are both investor, managing captively proprietary portfolios, which are the ones I am in charge of. And of course, we service also a portfolio of third-party owners. Overall, we manage 38 million of assets under management, roughly 15 billion account for my part, the proprietary investments, and the rest is a servicing on behalf of third parties. I think I can stop here and leave the floor to my fellow panelists.
Thank you, thank you. Next in my box is Fabien. Would you kindly speak, please?
Sure. So I'm Fabien Cléchat, based in Paris. I'm the Chief Secured Asset Officer working at Hoist Finance. So as some of you know, Hoist Finance is present all across Europe in 11 jurisdictions. The secured business line is active mainly in Italy, France, and recently in Spain. In terms of size, Hoist is 1,700 employees with 6 million customers, and we operate in 3 asset classes mainly: unsecured NPLs, secured NPLs, but also performing loans.
Thank you, Fabian. Joseph, please.
Yes, good morning, everybody. I'm Joseph Martinag. I'm the Chief Investment Officer in APS and also interim CEO. And APS is a leading Central European and Southeastern European primarily secured NPL player, but we also unsecured. The company started as an unsecured servicer, but then after the 2008 crisis, we sort of focused much more on the secured NPLs. Currently, we are covering some 15 countries from Poland through Czech Republic, Slovakia, Hungary, Romania, Bulgaria, ex-Yugoslavia, down south to Greece and Cyprus. And we are managing north of 9 billion of acquired debt, which we have acquired through basically the means of our funds and managed accounts and together with our institutional co-investors. And roughly 2/3 of that is secured and 1/3 of it is unsecured. We don't do purely NPLs. We bought also performing credits, sub-performing credits, leasings. We bought a couple of leasing companies, consumer finance company. We did restructuring, special situations in credit. So we're not a pure typical sort of NPL portfolio player in the Central Europe and Southeastern Europe. So yeah, so this is briefly about from my side, and looking forward to the discussion.
Thank you, Joseph. Guillaume, please, would you speak about yourself?
Sure, Guillaume Marinach. I am the Director of the Loan Asset Management in the Servie Habitat. Servie Habitat is one of the bigger servicers in Spain. It's owned by Lone Star and CaixaBank. and it's a one-stop full asset management platform that manage loans. We have in my department more than 8 billion euros of loans under management. When I say loan, it can be performing loans, sub-performing, and in a big majority, it's non-performing loans. And we are also extremely present on the real estate market because we are managing more than 20 billion of real estate of real estates. And whatever the kind of real estate, can be residential, land, a lot of land, offices, and yeah, and this is what we're doing.
Thank you, Guillaume. And last but definitely not least, Vasilis, please.
Hi, Denise, and everybody. Thank you for inviting us. Mount Street is actually quite a new company in the third-party servicing field. Started in 2013. Effectively, it is a carve-out of Morgan Stanley mortgage servicing. Then it has grown both organically and through acquisitions to run around 85 billion of third-party loans, performing and non-performing. We focus mostly on secured asset-backed portfolios. One of the transformational transactions that brought us quite a lot of scale across 10, 11 jurisdictions is the estate of the bank that was taken over by the German government, formerly known as WestLB, where is a lot of commercial real estate, shipping, infrastructure, renewables, and other asset classes. We have expanded in Greece in 2016 through credit and advisory for our clients. We follow our clients wherever they go. So we have done quite a few of the underwriting and special servicing mandates for clients coming into Greece and Cyprus, where I kind of personally focus. We work both with third parties who are investing in NPL primarily in our markets, and we also work to service some either as a primary servicer, but mostly as a special servicer. And also we work with borrowers to provide to effectively do what we think is lacking in our markets. In these specific markets is that a way to bring capital into situations to resolve what we think is needed to reduce the stock of NPLs in that domain. So looking forward to the discussion.
Thank you, Vasilis. And very briefly, I'm Denise Hamer. I'm from the law firm Kinsteller, which is the former Central and Southeastern European platform of Linklaters, ergo the anagram. And I had two teams. One is called Asset Solutions, which focuses on non-performing and non-core assets and exclusively of all classes. And the other one is traditional restructuring and insolvency. So basically, I spend my day with anything with hair on it. Let's get into it, folks. I think the first thing that we need to attack is basically the elephant in the room. Investing and servicing during the pandemic. Without a doubt, this has been the largest challenge that we've all, from every angle, had to deal with. Maybe Vasilis, since you spoke last, you could kick us off with some of the challenges that you've had to deal with during this past year and a half.
Well, critically, it's although everybody keeps telling us that this thing is going to be positive in the medium to the long term for our industry. I think in the short term, it has slowed down execution on a few new transactions that we have been looking at. And that is for sure. Whether we're on the sell side or on the buy side, we see that there are logistical problems with that. I think overall, the industry has responded well. So everybody adapted quite quickly to the day-to-day operations, but I think the long-term initiatives have kind of been delayed. I think that is one element. Definitely, we're all keeping our eye on what's coming next, and definitely in our markets, Greece and Cyprus, where at least Greece have been delayed in actually taking the actions required to launch the secondary market. I think we see that happening right now despite the pandemic. So I think it is on track. I can see a few problems in the horizon that may delay further actually what is needed, which is capital to flow into those markets, new capital positions.
This is interesting. You mentioned capital flow and also logistics. Perhaps one of the other panelists could talk about the logistics issues. What is it that you were confronted with? Was it valuation? Was it enforcement? Joseph, you were quite aware of all of these issues in your market.
Yes, I mean, so in terms of valuations, obviously, what COVID caused was that you have to the historical benchmarks don't work anymore. So you have to be sort of much more careful about how you look at different asset types. And sort of what we've seen over the last year was similar. I would say it was in a way similar to what we've seen in the public markets. Sort of last year by this time, I think it was by this time that public markets were totally scared and falling down, or maybe started to recover, and sort of so nobody knew really, what this is going to mean in terms of the real estate pricing and overall recovery of the NPLs. And slowly, sort of people get more confidence, and the discount seemed to be now much smaller or non-existent even. But on the other side, I think the big topic now is the question of inflation. So that's a hot topic these days, and so there's both sides. One side thinking it's temporary, the other side thinking it's more long term. So I'm more on the side of sort of this potentially can have a material impact going forward in terms of the asset prices. So yeah, so this is briefly from my side.
So there was an issue with valuation and asset pricing. There was an issue with getting liquidity into the market. Gianpaolo, you also mentioned some issues with just basic logistics, and so on. Maybe you could speak about that.
Yeah, absolutely. Pandemic had a remarkable impact on, especially on the Italian enforcement proceedings. I'll tell you something, Denise, about last year and what is still pending now, because the details, are reaching the current days. Last year, there have been mandatory reschedules and postponement, especially of the auctions. Okay, because in Italy, the vast majority of the auctions are celebrated in person. And the government last year allowed each core district to decide how to organize the judicial activities in a manner consistent to minimize the risk of contagions. Now, you can imagine how our public servants used this freedom. So there was a big shutdown for quite a few months. And then we returned to normality towards November and ultimately December. All the auctions restarted, but Denise, with the exception of the auctions whose collateral is owned by an individual or his family and is a primary dwelling. Why? Because enforcement proceedings first and foreclosure proceedings, of course, which is a tail of the enforcement, are still stopped, and the stay is gonna last until the end of June, with likely a chance to be extended towards the end of the years. And this caused, especially last year, a significant drop in terms of auctions celebrated, because in 2020, we had something like less than 120,000 auctions versus 204,000 auctions in 2017. So a drop of 45%.
That's extraordinary. Thank you. Yeah. Fabian, I'm sorry, Joseph. Please.
No, I just wanted to apologize. I just wanted to add. So just to add to what Gianpaolo said, I mean, we've been facing also across our markets, and I guess everybody sort of different regulatory constraints, limitations to running auctions. But in each country, it was a bit different. But what was very interesting was the development in with the residential assets. We've been able to actually collect same levels or even more than before the COVID started, which was quite remarkable. But that was based mainly on, we think the main drivers of that were the settlements with the debtors or and general interest in sort of resi assets across these markets where we are. The residential market is quite booming, and what we've seen was actually that some houses outside of the cities, sort of in proximity to bigger cities, were sold, which we were not able to sell for quite some time, and now all of a sudden it found its buyers. Perhaps this shows that also people are starting to think, to what extent they have to live in the city versus outside, but close to the cities. So this was an interesting development in our portfolios.
It's interesting that you raised this, and maybe Guillaume, you could say, basically what you're saying is that there was a slowdown in the actual logistics of the auctions and the enforcement. Enforcements were basically precluded. There was an enforcement moratoria. There was a backlog in the notaries, the judicial process, the courts, everything leading to enforcement. And then, as Vasilis said, capital initially dried up as well. But there seems to have been an upside as well, in that the people sitting at home had increased liquidity and were willing to settle. And there seemed to be an appetite for remote locations, which normally wouldn't sell. Guillaume, do you have a view on this? Did you experience the same thing in your jurisdictions?
Oh, yes, absolutely. It's true that on our side, also in Spain, there's been a huge slowdown in the activity of foreclosures. It's clear, because during 3 months almost the tribunal has been closed. But more broadly, I'd say that it's the total activity of acquisition that has been really slowing down the last year. There has been very, very, very few portfolio sales on the loan side, at least, secured, unsecured. The reality is that this COVID crisis is probably will generate in the future a lot of new NPLs. I think the estimation that we have is that in the next 3 years, there's going to be like more than 30 million of new NPL secured, generating of portfolios secured, especially on all the mortgage loans and on the SMEs side, and of course also some unsecured portfolios, more than probably 20 to 25 million. So all this is going to come up, and it's going to be, I think, a huge opportunity for the servicing.
We can only hope. Touch wood.
Denise, I think that probably Jan would share with me this. I hope that for the existing portfolios, this is going to be a matter only of IRR, that we won't lose in terms of money multiple. That's what I really hope, because we might trade off probably with the new way.
Yeah, it's probably going to take a little bit more time. It's true. So that will be an impact in IRR. I think on Spain, what we see is that there's a lot of activity already. There's a lot of activity, so the activity is there. The sales works well. But when I say opportunity of servicing, I think what we can see in Spain, especially at the moment, is we see a lot of small to medium funds coming in who want to enter in the market, which is a little bit new on this. And so there's a huge possibility, especially for the servicer who's doing servicing for third party, which is what we are doing in Servi Habitat, and to serve some medium to small funds that are entering in the market with the willing to buy mortgage loans, individual loans, or SMEs. I think there is a really huge opportunity there. There's also, we can see also opportunities on servicing with the existing banks, because most of the debt of the NPLs are still on the banks today in Spain, and so all the third party for banks is an opportunity for us, for sure. And I see also that we will need also to have some really client, being very client focused on the way we want to manage the future portfolios. It's true that you can have investor who wants to have a quick return, as you say, as you said, and so this one, okay, you have to be maybe more NPV driven, and on other ones that want to create value is offering new services in order to be able to grow value and to create value, especially on assets distress.
On that point,
Fabian, may I? Yes, please. we
on
lost
that
you.
point, jumping on. I mean, I'm not going to add on to what Gianpaolo said on Italy. I mean, he even mentioned the figures on auction. 45% is quite a clear reflection of what happened. I mean, the first lockdown was really difficult to cope with, both in Italy and France. But we see that this situation continues in Italy. The timing, they don't seem to catch up, whilst in France, the situation is a little bit different. We've adapted much better, I have to say. What we've seen, exactly the same things. I mean, a slowdown in foreclosures, distribution procedures, judicial sales, but maybe some things were different as well. I mean, a lot of amicable sales happened after the first lockdown, and the courts adapted very fast to this new situation. I just wanted to comment on Guillaume's point. I think one thing to stress out of this crisis, I mean, of course, it's a lot of volume and everything, but what we should be very careful as investors and servicers on customer protection. Customer protection is really key in this kind of situation. We are starting to become systemic in the way that we impact a lot of people in difficult situations, and we need to raise the bar when it comes to the industry standards. And that's a message that I want to push whilst we have such a big audience, because going forward, that's going to be a key point. I think IRRs and price is going to matter. But the way you handle your customers and the product and services you offer, which was alluded to by Guillaume, is going to be a key point also for banks and regulators to let go some of their customers outside of their hand, basically.
Fabian, you make a good point, and this is about emerging from COVID and how we face the new market. Maybe you could say a word or two about how you see improving the customer experience, and
Sure.
then the others can jump in.
I mean, as you know, we are regulated by the Swedish FSA, so we have a lot of the banking regulation in place for ourselves, and all of the big players in the market adopted such a regulation. So that's the first step, or the basic one. But beyond that, we should offer product and services and advice to our customers for them to be able to maximize the sale of their home, for example, or to fill in the right over indebtedness procedure if necessary, to treat the vulnerable customers in a different way. That's all the type of regulation you can see in markets like in the UK, for example, that is not really, I mean, which we've seen also in Spain recently. There has been regulation on this, which we don't have in France for the debt collection industry. it applies, of course, to the banking industry, but not the collection industry. So that's a number of examples that I mentioned. I think we need to step up to this.
I confess that I have never heard a servicer ask for more regulation. I think this is a first in history. And Gianpaolo, you were mentioning how the whole, and also Joseph, how the whole logistics process was quite slowed down during COVID. There's a great movement now to digitalization, electronization, I never get that word right, of the whole process. Are you incorporating that into your own servicing activities?
Yeah, we are. I'm not the one in charge actually of this process. I remain a little bit more traditional. Other players in Italy have established successful platforms for digitalizations. Of course, we remain still, on the brick, as we say, and on the properties.
I see. And Joseph, how are you coping with that?
Yes, so we had to sort of face the situation and adapt, and it was a good thing because there was actually something which pushed us towards more digitalization. We had to face things such as, the call center being moved. I mean, not people not working from the office, but really working from home. So, and not only things like that, but it's just an example. But overall, I think this had an impact on the whole industry. Obviously, you see the push from the European authorities also towards sort of more unification. So what we've done, we've also adopted the naming they're using for the template. So we try to sort of utilize that, and we had to adapt to the situation. In many countries we had situations such as the court's not working, notary is not working, impossible to meet in person. Normally we have to do things in person. So it generally slowed down the collections, but it also, I think, provided impetus to really sort of kick off some changes which are for good. So also for APS, from APS side.
We have the EU directive coming on insolvency. We have a lot of EU initiatives funded by EBRD as well on sort of harmonization of documentation and electronicization of the process. Vasilis, are you feeling this in Greece and Cyprus, or how is it affecting your jurisdictions?
Well, I think for us, I think the problem is kind of smaller because you have fewer players and you don't have too many people interacting with too many else, and you've seen 3 or 4 large platforms. We have one of the most concentrated banking systems in Europe, with 95% of the assets held by 4 banks. So the fact that each has been a carve out effectively, there is one fourth coming now, which is not going to be a carve out. It's going to be one of the other platforms that primary platforms that work on that. I think that has been less of an issue because everybody had like good systems to start with, and then they married it with their own kind of capabilities. And I think, generally speaking, that has not been the issue. I think the issue for us is in a market with the highest percentage, the 2 markets with the highest percentage of NPLs as a percentage of all, I think price discovery has been one of the difficult aspects, finding the data you need and the samples and the volumes and the populations you need to actually understand where are we heading. And to give you a sense, the primary focus is not the process itself necessarily. You have, I think, quite astute technology solutions in place already. There are, I keep getting these calls from a number of platforms that kind of create bridges between other players and us and us in the secondary market. I think the reality is, again, I go back to in a market with 60% of SMEs are being in NPLs, whether they show up on a bank balance sheet as an NPL or now as a part of the secured government guaranteed senior tranche of a securitization, static securitization. The problem is the same. They need to be able, after a lot of years, to replace the existing lender or to access working capital. That's on the business side. I think the politics and the economics have changed in Europe, but mostly in America. We are very active in America. We just announced a partnership with a capital provider. The policy response that has come through I think what other people are experiencing in the residential market, which is higher disposable incomes, enabling people to actually get into new restructurings, kind of solve long-standing problems, and the fact that there are areas of residential property that are going to benefit, like many other sectors, are going to benefit in terms of valuation. Kind of the delta that we kind of servicers kind of play off, which is the value of something as a non-performing asset and the value of it as a kind of recently reperforming asset is so big now, given the policy response from the monetary and the fiscal side, that it makes our work, it should make our work easier. In our market, it should have been easier because real estate was growing at about 10% across the board. Obviously, in commercial real estate, the picture is a bit more different right now, and we employ some technology which we think help us capture the next opportunities in even more developed markets like the UK, Germany, and all that.
Thank you, Guillaume. How was your experience in Spain, which historically, even before COVID, had a very kind of a slow enforcement process? Were you affected, and do you think that technology and other changes will come about?
Technology will be key, and it's the capacity of servicers to modernize all their systems or their way of system of asset management, etc. But what I want to point out, especially because I think the point of legislation is very important. I think the big difference with this crisis is that Europe has reacted extremely fastly, and they have, they are working on a law in order to tackle all these NPLs. And I think we're going to go extremely more faster than in 2008. Or in 2008, we were a bit, it was the big surprise, and so there's been a lot of, months and months of in order to, expecting reaction. It was a total different crisis, but I think that now with what our experience, I mean, all the countries have the experience, and what is super important is to act extremely fast. So I think we're going to have a legislation European very clear around all the bankruptcies, how to modify the legislation in order to be faster. The only thing is that each country needs to adopt some law that will be in the direction of what the European law will say. And on this, I hope that in Spain they will do this, because it's true that we have the foreclosure is a system that is complicated in Spain. It's slow, and the post all the things that are after auctions, in order to get your asset in your book, it's very long, and this is something that needs to be improved from the different legislations. Hopefully, it will be done, and so that we can be in a situation to solve this crisis fast. Because the problem that you can see in Spain is that at one point the total debt of the total crisis of 28, we're still managing NPLs from this crisis.
Yeah,
from 28, and now they're getting another one, which is the COVID one. So I mean, the only solution is to be extremely more fast and have the right legislation in order to absorb this kind of crisis.
In my view, Denise, Guillaume, Italian banks, but I think this is true also across the entire continent. We are a little bit more experienced now because the first wave was a little bit unexpected. I think the level of provisioning now of the performing, which are going to migrate to NPLs, and the level of provisioning of the existing NPLs is much better. And this will, so coverage ratio, thanks also to the regulatory pressures and concerns, have somehow bolstered the financial institutions, not only of Italy. That's why I'm a little bit more optimistic. And thanks to those regulations, the Italian banks managed to halve the number of NPLs on stock. Clearly, Denise, you know the market very well. In Italy, the majority of the financial institutions decided to divest the NPLs. So we had at the beginning of the crisis more than 340 billions of NPLs. That number has been halved thanks to divestitures. So I believe, and I'm coming back to what Guillaume was saying, that financial institutions now on the sell side are a little bit more organized with processes and rules to avoid unexpected surprises, bad surprises.
It's an interesting point that you raised, Gianpaolo, and it affects Greece as well. Italy and Greece, and to some extent Spain, came through with securitizations to very aggressively deal with the 2008 book, the back book. And those were government guaranteed through various programs, GAC and Hercules and so on. One of the points that you raised, and maybe Vasilis, you could talk about this a bit, and Guillaume, it was that it kind of sucked all of the liquidity and credit and interest out of the market. So now you have these enormous securitizations. How is that affecting the market? Did it skew the market? Are there new players coming into the market? Is there a secondary market now? Is there room for that?
Not enough. I think the reality is that right now the banks are raising capital left, right, and center. So they're raising equity, they're raising capital by doing this kind of securitizations that attract some very large and specific players. And it's not an easy area for a smaller fund to invest. Mm-hmm. So I think once these have been set up and the carve-outs kind of settled, then you're going to start to see secondary activity. I think the risk to that is that historically, and I'm talking about mostly business NPLs, because the residential is kind of a different element has different elements. And I think the policy response again there is going to play to the strengths of all the established players. But on the business NPLs, SME, corporate, shipping, other, I think there I think the risk is so far capital has not been able to flow because the banks didn't have the provisions. Mm-hmm. Now that the banks are starting to get some capital, they are also though shifting that onto some vehicles with some very ambitious business plans. And these business plans, if you look the trajectory of historical work by more or less the same kind of units, now under different management though, has not been enough to achieve those business plans. So if they take the time to kind of create that track record, this may take 3-4 years to actually work through. I think the best outcome for the market and also for third-party servicers is if kind of there are significant segments of these kind of outsourced and given out or sold to the market, so that you can help price discovery. So once price discovery and kind of the market performance is established, then you can see a lot more activity and actually a lot more work on this and some actual competition as well.
Gianpaolo, Guillaume, would you like to add to that, or from your own jurisdictions?
Well, just one word on this. I think no, I share what has been said. I think what is important very quickly is that the banks are focusing on what they have to do is finance the economy, and not manage all the bad book they have in their balance sheet. So it's extremely important that there is that in order to recreate the activity that the banks put their the provision necessary, and that we can really find be in a good dynamic. That's I think the question of the financing is going to be something very important, because the reality is how is, especially in a country in Spain, for the moment we see a little bit of changes, but not too much. I mean, in a retail business like we do, like we are doing. I mean, the question is how the banks are going to change their condition of financing. Are they going to ask for more deposit? Are they going to ask for interest rate different, LTV different? And that this is going to be, I think, the key for the for this year in 2022.
Yeah, it's a pity we seem to have lost Joseph, because he and I work in the same markets, and we've been struggling a bit with the larger markets taking the liquidity from CSEE. So I'll just say that on his behalf. And also the markets in CSEE have been traditionally carved up by 3 or 4 large players. Gianpaolo Intrum is one of them, of course, and APS, Joseph's APS, and B2 and EOS. Fabian, do you see new players coming into the French market? Do you see a difference, or has the market more or less been carved up because of liquidity issues, because of the way the market has played out historically?
I mean, to start with, I mean, if you go back to 2008, there was a trillion in NPLs, and now we are at around a little bit less than 600 billion. So overall, the stock has been reduced by 40%. But that is really different realities between Southern Europe and other countries like France, including France. So whilst in Italy and Spain and probably now starting in Greece, you have a servicing market which is professionalizing, and banks focus more on their core business. You still have a legacy to manage in countries like France, where they are accumulating 150 billion of NPLs. Now, if you look at the servicing market, you have the big players. You still have Intrum, EOS, you have B2, Hoist, but you don't have many more. You have IKEA also, and that's pretty much the whole market. So now you see some funds getting into the market, partnering with some incumbent servicers who are co-investing with us. So you do not have independent servicing capabilities in France right now.
It's been an interesting evolution of the servicing sector in general, because originally servicers were attaching themselves to primary investors, and ultimately the servicers became the investors themselves. I have a question for you. I mean, one of the biggest concerns that kind of slowed down the 2008 book cleanup was a big fear of assets flooding each market. And I speak on behalf of CSEE, on behalf of Joseph, since he's not here yet. Especially in smaller, shallower markets, to have a flood of assets coming into the market would obviously skew the market, skew pricing, and have an unfortunately negative rather than positive effect. Do you feel that in your market, Fabian? And then we can ask other people as well. What do you think is going to happen because you have a combination of an overhang from the back book that was never resolved from 2008, plus a front book coming? How do you think that's going to impact?
What we see is that there is a correlation between growth and peak in NPL sales. If you look at growth, GDP growth, so the banks tend to sell at the right time, historically. Now, will they be able to even cope operationally with everything? This time, I'm not sure. Right now, The SME stock of NPL is at its lowest in France. When I'm speaking with various banks, they say, well, for now, I have nothing to do, basically. Let's wait and see what happens when the support from the government stops. And it's been so strong support that that you have a lot of zombie companies still doing business. But that doesn't mean that they are not doing nothing. There are a lot of analysis ongoing right now to, I heard even to talking about technology to rebuild the P&L live on the basis of the bank account, to understand whether they are alive because of the support of the government or delays in payment of tax, or whether the business is going well. And of course, you have a lot of restaurants and hotels, etc., which we know are not gonna survive. So the question really is how you can support as many customers, companies as you can by restructuring, because there will be an element of that. This is typically the aim of certain investors like us, who are buy and hold investors, where we restructure basically to keep the companies going in bonus and maximize their chance of survival, whilst keeping the opportunity for the bank to continue doing business with those companies. And we are also seeing some opportunities in UTP.
Well, the UDP probably, yes, it's the market we will see picking up. Italy, for example, is a pretty, the Intrum is investing a lot in the UDP. We recently purchased a portfolio from Beeper, mainly collateralized by accommodation properties, which is probably a good sign for a recovery. And in my view, the next EU generation would represent, and this is probably the last message, would represent a big chance for everybody. For a great recovery, also inside a wave of NPLs, we will have a clear path ahead of us to do better.
Joseph, I was speaking on your behalf when we lost you a bit, but I'm glad to have you back, because we have on one hand Gianpaolo, huge market. Vasilis, Greece is a huge market, and then in CSEE you have very shallow, small markets. One comment I made earlier was that there was a big fear of a flood of assets coming into these markets. How do you see the post-COVID market situation?
Yes, yes, and apologies, a bit of a trouble. Speaking of technology before.
It was the perfect time for you to tune out.
Yes. No, I was able to join as a participant, but I sort of couldn't join live. Anyways, yes, I think it's going to be similar but different than last crisis. Last crisis, the banks were not prepared, as I think Gianpaolo or Fabian mentioned. At this time, the balance sheets are stronger, so I think the banks will choose the path of sort of much more restructuring, very careful approach. So, and that's also seen by the pipeline. There's not much pipeline of COVID NPLs at the moment from what we see, and sort of let's see if by the end of the year it's going to start. So far from what we've seen was mainly the old backlog of NPLs still being sold, still being traded, but no new COVID, no new NPLs from COVID. But I think it's going to be similar in the sense of different countries will have their own, let's call it waves of transactions. So, operating in Central European, in lots of markets, which are quite fragmented, each of them sort of quite different regulation and so on. I think there will be a couple of markets which will be more sort of faster, and then other markets will follow only later. So let's see. But I expect that it's going to be different in the sense of probably retail NPLs being worked out much more internally until they come to the market, and it makes sense. And we need to be sensitive to the situation, because this is sort of crisis which is no fault of anybody. So as Fabian mentioned, I fully agree with him that sort of settlements is probably the right way to do this. But there's going to be definitely lots of SMEs coming to the market. SME and small businesses were hit the hardest. So we expect to see a lot of that. This was actually historically our core assets we've acquired. We've been managing also large corporates, but mostly SMEs, small businesses and retail. So I think we're going to see a lot of that. But at the moment, the markets are pretty dry.
But Vasilis, you in Greece, I mean, actually you're covering two very different jurisdictions, Greece and Cyprus. But looking at Greece, for instance, do you see any spin-offs from the large securitizations? Do you see a vibrant secondary market? And also, Gianpaolo, what do you see happening? Maybe Vasilis and then Gianpaolo?
Not yet. I think right now all the teams are kind of getting their ducks in a row, so to speak. They are trying to kind of add on portfolios, which is kind of the big bet. Once you do a carve out and it's your first or major investment in Greece, then the next step is to kind of leverage your platform to add more portfolios. People are not yet focused, especially due to the moratoria. They are going through the motions of the Hercules, the asset protection scheme, and all that. It's quite cumbersome in many ways, I would think. The problem is that once this is done, you want to turn around and see where your KPIs are and whether you need more grace period. And I think there is an argument to be had that more grace period is needed, but at the same time, the NPL from the other side, from the borrower side, it's still the same. Whether it's not being resolved or restructured properly or viably because it was a bank that didn't have the provisions, or whether it's because there is a servicer that doesn't have the business plan headroom to do that. It's the same problem into the economy. I think what's going to solve and short-circuit that, I think, is indeed the secondary transactions. But I think these are going to start from next year, at least in our markets. I think in Cyprus, there are a couple of large securitizations that are already quite successfully doing that. I think the other element for us is we talk about banks a lot, but if you take a step back and look at what's happening in more development, like the US market, you have a lot more alternative credit coming into our markets, especially in SME. And that, in my book, is kind of the promising aspect here, because in the end, you need to move the market forward. Either the banks are going to start lending back to the same people. When you have 10-15% securitization, like even in some markets, it's easy to kind of forget that in a market with 40-50% NPL, real NPL as part of the economy overall, it's very hard to find a new lender, right. Even at the right sustainable capital structure. And the challenger banks have been raising capital, but it's very small. The systemic banks have been raising capital, but again, very judiciously. I think the new thing would come, that needs to come, is alternative credit directly into the market. And I don't feel bad about Southern Eastern Europe, because even Greece, even Italy, Greece is considered exotic by some of these investors. Even Italy somehow is considered exotic sometimes, but because of the jurisdiction and the legal framework. But overall, this is the next challenge, and for us to capture it as well, to become their partners.
So I guess Ukraine, where I work, doesn't even get on the radar. We're coming into our last stretch, and I just want to make sure everyone gets to have a last word. So what we've heard now is that, you know, the banks are basically restructuring as a focus, and servicers are working with debtors towards settlements, which has been facilitated by more liquidity from debtors, and also forced by the emergency regulations. Gianpaolo, what do you see, you know, in a few words, as, you know, Q3, 4, and 2022 for your business?
Well, you know, first of all, we expect a remarkable rebound in 2021, especially in the third and in the fourth quarter. This is as a macroeconomic view. Also, the Bank of Italy expects a growth rate which is going to be an average much higher than the last 5 years. I think. Also in the macroeconomic, the European Central Bank will keep on purchasing the debt of the sovereign debt, and I believe that this is coupled with the recovery plan, which the Italian government is implementing. So we will face a growth not only in the real estate sector, but also on the entire economy. This should definitely sustain also the NPL sector, because we will have additional investors which will be definitely attracted by Italy. I see Italy, thanks to this government and the recovery plan, finally becoming again a leader in Europe, also, and not only in the NPL market, I hope.
Well done, well said. Fabian, what do you see in your market?
Well, in France, we need to unlock and first have the primary sale happening. So that's a first step for us. In terms of the macroeconomic, it's as the vaccine are getting, I mean, as most of the population get the vaccine, we hope that yeah, Q3, Q4, we will get back to normal. Not sure it's gonna show in the numbers this year. I hope so, but we are a bit less optimistic for this. We hope so. In terms of the NPL sales, we think there will be some tenders towards the end of this year, big ones happening, of which we know, but 2022 will be a major year, we think, and it will be very important to have the right servicing capability. And I think we should be all very conscious of the role we play in society in general, and raise the bar when it comes to treating customers fairly in this period, because that's, I guess, the condition for the NPL sales to happen, that they know that they can trust the people they are selling to, and that's very important, I think.
Well said. Guillaume, everyone loves Spain. Spain never goes out of fashion. What do you think about the Spanish market?
Okay, I mean, what we can see already is that there's a lot of activity in Spain, especially on our activity of management of loans, on sales, on finding deals, and it will. I agree a bit with Fabienne. It will be, the campaign of vaccination is very, very key, because of course, if you can, even if in Spain there's less restriction than other countries, it's true that, okay, the vaccination of the population at risk will help in order to get the things getting much more normal. What I think is in 2022 we're going to see a lot of opportunities, and what I want to say is that for me there's going to be also a change in the market. It's that now it's going to be, especially in Spain, a real market of buyer more than a market of seller.
Interesting, interesting.
So
And
we're going to have some real big, interesting new opportunity. We are starting to see some, but it's really slow. Okay, there's not that much, but it's going to be now really a market for buyer, I think.
and thank you. And Joseph, you cover a huge swath of land. What do you see happening in our neighborhood?
Well, very briefly, I think that the economy is going to recover very fast. The key question mark to me remains the question of inflation. That's something I'm really looking forward to see how this pans out. And I think the NPL activity is going to be there and be strong, but will start probably only end of this year. So again, different for different markets. In Greece, I would expect much more to see much more of secondary trades in our country, in our traditional sort of Central European countries. As I said, we'll probably start with SME, is to see quite a lot of SMEs and perhaps also single tickets. So let's see, looking forward to this, being more busy.
Me too. And Vasilis, do you want to bring us home?
Sure. I think the final thing we didn't mention is for many of our markets, I think hospitality is one sector, and travel that is structural. And if we start to see kind of a normalization, for Greece, it's 20% of the GDP. For most southern countries, is north of 10-15%. If you don't see a return in the hospitality sector, I think that will have a ripple effect on a number of other areas as well. It has opened up a lot of opportunity in the hotel space for opportunities to invest in more reasonable valuations. It used to be that the average ask that I was seeing for hotels was on normalized EBITDA of 15, 16 times. Now we see 10, 11 times. That is the right time to go in if you think that this sector is coming back, and it is a fifth of our GDP. So watch out for the summer.
Okay.
Vasilis, you will host us in one of your Rio hotel properties, some of your islands.
Yeah.
Okay.
Hopefully.
With this panel, we can travel the world drinking.
No, physically, it's gonna be physical.
Yes, yes. This time it'll be physical with from one REO to the other. Gentlemen, thank you for a very illuminating and lively panel. Delighted to have you. Delighted to moderate you. And thank you, audience, for your engagement. We had a very large audience today, so that was really amazing, all things considered. And we look forward to seeing you in some way or another very soon. Thank you.
Thank you very much.
Thank you. Bye-bye.